Started. Let's see.
Hey, can you hear me?
Hey, bro, can you hear me?
Yeah, I can hear you.
Awesome, man. How's it going, bro?
I'm doing all right, man. I'm doing all right.
Same here, man. It's waiting for that US 30 to drop. Man, it's
I
looking at a
uh
long day.
I decided not to take the trade today. I screwed up, so I was gonna wait till next month. All right, so I got a couple questions for you
Yeah.
because I don't know what I'm doing wrong here with my trading. Because we spoke about this that I don't want to just take signals. Like clearly your signals and the results speak for themselves, but like the last dude said, signals only get you so far. And me
Mhm.
doing all these FTMOs have helped me realize the knowledge that I got from trading stocks, options, and futures, it really doesn't work here because futures is a trending market. Like when it's up, it will trend up for months at a time. Same
Exactly.
exact same thing with stocks and options, but like with Forex, like trend lines and stuff does not work at all. Doesn't respect trend lines, doesn't respect Fibonacci's. So I was trying to do like zone to zone trading, but I wasn't using these zones. I was like marking up my own zones to try to catch bigger moves. And on when I wasn't demo trading it, but I would just mark it up on my charts and then I would like fake paper trade it. And I was doing it on odd USD because I heard that pair was very volatile, and I literally won like every trade.
Nice.
And then when I really did it on the real account, lost every trade over and
It
over.
always happens, man. It's horrible.
Because I know that I can do the strategy you do here. I love this 4 hour strategy. I love it, and I know I can do this one when I'm actually back home and I'm not. Currently, I'm in a different state for work right now, and I can't have my computer on me all the time. And I tried using it on my phone, and it's hard to do the placement tool to get like the exact amount of pips and stuff. It's always off. Um, and I told you that I tried doing the 30-minute strategy, and it's just too many alerts for me
It's way too
personally.
many. That's way too many. You have to be like on the screen like all day to take that. So that's why I moved from that to the 4 hour because it's way too many.
Yeah, and so when I'm back home, I actually I don't really work a job. I just do school, so I could easily do that because I could just stay on my computer all day. Because I'd love to. I would love to trade full time and to do something online. But here, because I work like 1 to 11 every day, and like have 1 day off a week, I couldn't deal with that many alerts, and my phone was going off every 30 minutes. And then by the time you get to the alert and you check it, then like the trade's already gone. So I was trying to do the 4 hour one, but like it's difficult on the phone because I can set up the zones on my computer, and then I have Trading View Premium like you, so then I can just do it on my phone. But like just going every 4 hours and then looking, using that, maybe I could just do like market entries and set it up on my own to go basically to the next zone or aim for like 40 something pips, because that's what screws it up for me, is like using the trading view automatic placement tool for the to find the swing. And I can't get it exactly on the phone. Make
Yeah,
sense.
if you're doing it on the phone, I wouldn't use it on there because I've tried to do it as well. I had the same issue.
Okay,
It isn't automatic because you can't use that zoom out feature. On the computer.
thank you. I knew it was something that I
Yeah.
was doing wrong because I couldn't find it. I was like, why can't I get this on my phone? Like, it doesn't make any sense. I knew it.
Yeah, because it'll pop up, but it doesn't have like all the data like how it is on your computer. Because you hit the zoom out button and it just pops up. It's like perfect on
Yeah,
point.
perfect. It pops up perfectly, tells you exactly where it needs to be, but it's very much different on the phone.
Yeah, on the phone, I would probably just set your TP at the next zone, and then I
Yeah.
would put the stop loss like an equal distance away.
Yeah, okay, that sounds good. Another question. So because I've been running a lot of math, because me and you talked about doing the whole like US 30 trades and UK 100 trades. I was doing
Yeah.
math on it. Like in order to pass the challenge, like you were saying, you really can't go small lots unless you're scalping. Like unless you're a good scalper. And like I'm just not at that point yet where I'm a good scalper. Like I keep getting tapped out and then it goes my direction. So I know I'm right in the direction, but like my entries must be off. So I was like, if you do 10 lots, that means you have to lose 6.75 trades in a row to fail.
Mm-hmm.
But if you move up your stop loss and it taps you out at TP1, unless you have point positions, like the last four trades, like I don't know what the dude was talking about when he said US 30 was bad, because literally the
Oh,
last 4 or 5
that's what I
trades
was
where I
saying too.
went.
Yeah.
Oh, and I was like, but like I should have had 6,000, but I only had 2,500 because I moved up my stop loss. But we don't move up. We don't like we never exit a trade too early. So if you take a full loss, then I already lost like 60%. So I was thinking that, like you had said, I just can't move up my stop loss unless maybe when I'm funded, then it could be a little different. But like to actually pass it, I don't think there's a way to do that unless you have twin positions. I took all the last four trades and I moved up my stop loss and I won every trade back to back to back to back. And I had like 2,500. And then that last trade, since it went negative and exit a trade too early, then it was a full loss.
Mm-hmm. Yeah. So, yeah, if you're planning on doing a 10 lot, I mean, during the challenge, it's different because your main goal is just to get that profit goal.
Yeah, of course. Yeah,
So,
you said that.
yeah. So that's like the main goal for that. But once once you're funded, you can just start cutting it early because you really want to just lock in profits. So yeah, I wouldn't use a 10 lot. I would probably use between a 12 or a 15 because if you use a 10 lot, I don't think you'll be able to pass it within time because you technically, I mean, they tell you have a whole month, you have 30 days, but in reality, it's less because you have to count the weekends. So that's like 2, 4, 6, 8. That's like 8 days taken off. And then
Yeah.
you don't usually trade on Sundays. So that's like another 4 days taken off. So that's like 12 days you're not trading. So in reality, you have like 20 days or less to pass that challenge. And it's just not, I mean, it's just not possible. I mean, it's possible if you have like, full on just straight wins back to back to back. But in reality, that doesn't usually happen. You have like a few wins here, a few losses there. So I would probably just run like maybe a 12 or 15 lot and then let him run a full TP.
Yeah.
Um,
Okay. That's what I was thinking as well.
yeah, because you'll just let the trades play its course. Like the win rates is always
Of
going to be a
course, yeah.
little
The
iffy.
win since the win rate is there, because like when I told you I was getting my friend into it, and
Hmm.
I explained it to him, and he was thinking the same thing. He was like, "That sounds super easy. Like if every month, like because the past 9 months, because I started with you. What did I message you first in October-ish, November-ish to
Around
sign
there,
up?
yeah.
And looking
Mhm.
at the results, I was like, every at the end of the month, every month is positive. So my friend he wanted to wait for me to do it, and I was like, and he was saying that he was like, don't you think it's going to be slower or something because of holidays? I was like, I have no choice but to believe since the past 9 months were positive, the next month's going to be positive. If the past 9 months, every month at the end of the month, it's positive tips, then you can only believe one thing. And
Exactly.
look what happened. I was actually watching a different webinar with you about some other dude. He said his dad was white, his mom was Puerto Rican or something like that. And there was a couple losses. And you had mentioned like sooner or later the strategy is going to swing back. And then the trades I just won swung back. And I thought about that. I was just curious if he had took those trades or not.
Yeah. So yeah, generally, like there's one guy in the group, I forgot what his name was, but he like what he does is he'll take like normal lot size for like two trades. If we have two back-to-back losses, then this dude doubles up. It's fucking risky. I would never recommend it, but he
Yeah, the
always does it.
martingale system. I
Yeah,
was
yeah.
running numbers on it as well. It's actually It's actually a very interesting strategy because I was thinking the same. Because I mentioned something like that to you kind of before about the whole over leveraging thing when I was saying if November the least amount of pips gained so far for the results is 3,750. So if you risk X amount and maximum of 2 trades back-to-back losses, then you should pass. But you were saying that's over leveraging and you should not risk it. But
Yeah. Because there's no guarantee that the third win is going to bounce back. But just going by the numbers, I don't think we've ever had more than 2 back-to-back losses. So like once you get to that third trade, it's kind of like I don't know, it's probably going to hit. So like generally that one dude that was talking about it, he does that, so he ends up covering all those losses and he goes in profit. So he literally just covered all those losses from the previous week, and then he just ends up bouncing back because usually like after we have 2 losses, it's usually like a hot streak. We'll have like 8 wins back to back to back.
yeah.
And then it always has to pull back because obviously the strategies no strategy is 100%, but
Of course.
yeah. But with like that mindset, I was like, dang, that actually like makes sense. So I was thinking about maybe doing that for my own accounts.
Is he doing that on FTMO? Because like the drawdown rule is really the big issue on FTMO, because that's how I blew my first couple of accounts with FTMO. Was like I completely forgot about like the equity being considered in the drawdown instead of just the balance. Because like I would be trading like US 30 or NAS or gold and stuff like that, and it would go in drawdown and then it would go for me. But since it already went down in drawdown, it would still count against me, if you understand.
Yeah, because if you carry it over into the next day, it stacks. So
yeah, so since I was doing it at night right before I went to sleep, I think that was the issue.
Exactly. And that's why I only do US 30, so that my trades will reset by the time it reaches Asia session. Yeah, because I think it resets 2 p.m. Pacific Standard Time. So I'm not sure where you're located, but
I'm in Texas, so I'm an hour ahead of you.
Hour ahead. Okay, cool. So probably 3 o'clock your time. That's when FTMO resets. Okay. So you probably would want to get out of the trade by then, if possible. But obviously, the market's just kind of slow right now. Like obviously,
there's like normally, no volatility. It's depressing actually.
Yeah, this whole week it's like surprising because normally like we're in and out of trades within a couple hours or so. But like lately, we've been holding on to these trades like until the next day, and it's just annoying sometimes because it's like you're like trying to get out of this trade and then it just ends up lingering for like a whole day. Like even on Monday, we took that trade and it went over to like the next morning. Like thank God it hit full TP, but still I was like, damn, we're really holding this for that long.
Okay, so if you entered a trade at night, then it wouldn't reset till the next day till 3 or for me or 2 for you. So then that would carry over. Okay, I understand now. Yeah, so that you got to do it the day of and then hopefully get out. Okay, I see.
Exactly. That's why I usually try to get out. Like when I tell you guys sometimes in the chat, I'm like, yo, like the swap spread's coming up, so you guys might want to close it and then to reopen it the next day. Because in that case, your drawdown resets and then you just have a full day following that to take your trades.
Yeah. And then really just some psychology things, because I realize like psychology is a really big part of trading. Because realistically, like you said, it's gonna go up or it's gonna go down. And like it's having too many things on your screen it just ends up being this way too much noise. And I've watched the Mark Douglas series like 4 or 5 times, and that helped your psychology, but it doesn't really tell you about like it's nothing regarding strategy. And if you have a strategy that doesn't work, then you can have the best psychology in the world. If the strategy doesn't work, it doesn't work.
Yeah, it's just not gonna work.
Yeah, exactly. So because I was reviewing that and I was like, I don't think my psychology is off here. If I'm only risking $500, $750 every time, then that's fine. I think it's just the technical analysis that I'm doing isn't working for whatever reason. Because I was looking to back test and stuff. We talked about like the DAX and the UK 100 one of back testing it, but like since you had said it didn't dismotivate me, but since you were like it's not enough data, I was like, well, if it's not enough data, I really don't want to like try to take those trades if it's not enough data.
Because the problem with that too is that like it's traded differently. Like for US 30, I have that 1-to-1 risk. So like I mentioned, like we just talked, price can go up or down. The problem with having your stop loss too tight is that it could trigger your stop loss before it hitting TP, and that's happened a lot with UK 100. You'll see like sometimes we'll have trades where it literally triggers the stop loss slightly and then it shoots straight to full TP, and I was like, you
When I
know,
was scalping US 30, that's exactly what was happening that I was upset about, because it seemed like it went to my stop loss to the exact tip, shot up. And I was like, oh my gosh, I feel like the banks are hunting me right now or something. Because every time I was doing like 50 lots, but I was only aiming for 100 pips. And I was doing like zones. And I'm like, all right, it should bounce here. And it would go touch my stop loss to the exact pip and then shoot up. And just every time, every trade it did that. And then I realized like my stop loss was just too tight. The
yeah,
market was just hunting for liquidity and on retail traders and whatnot.
exactly.
But like you were saying, like I know you started this last year, so clearly you're just a normal person who like developed these awesome strategies and stuff to trade for yourself. You're not like these like the Q banks of the world who are already I hate watching people like that who are already these huge traders and multi-millionaires, because I feel like they forgot what it was like when they weren't at that level just yet. Like, because
Exactly.
I've watched some of his videos and he has all these lines and stuff on his chart. And I was like, I honestly don't believe he trades that way. Like, I really don't. Like, he went to like a line chart and then he went to the like daily and he was like, all right, I'm going to drop these lines for these support and resistance and then go to the 4 hour and drop these lines. And it was like 50 lines on his chart. And then you go on his Instagram and it's like
Clean
two
chart.
lines on his chart. And I'm like, so they post this stuff on YouTube so you get incorrect information. So you like buy the course and whatnot. I was like, I don't know. I don't know.
Yeah, yeah. Well, yeah, that's why, like, for me, I do the same thing every day. Like, if you ever go on live sessions, you see that I analyze everything exactly the same every
Yeah,
single.
yeah. I'm on the live session every day. Yeah, you do the 4 hour and then the US 30 because that's all you need.
Exactly. That's all you need. And it's all about consistency. It's about doing the same thing. Like, I'm sure, like, Q banks and all of them, they have a process too, like similar to what I'm doing, the same thing. But obviously, if they're trying to teach someone, they got to go more into detail with stuff. But in reality, it's like I was mentioning, you got to keep it simple, because the thing is, if you have too much stuff on the chart, you're gonna miss out on a lot of stuff. Like, you're just
Yeah.
gonna be you're just not gonna want to take any trades, like, because you're like, oh, this requirement didn't meet, this required didn't meet. So it's like there's no trade. But if
Yeah, I
you,
forgot what that's called. There's a word for that when you have too much stuff on the chart. You get like frozen and you can't execute the trade.
yeah, I think it's called analysis paralysis.
Yes, yes.
Yeah. I used to hear that all the time. It's funny because I used to get that all the time. Like, I have too many requirements. I have like 16 requirements, and I'm like, oh, this met, but this met, but this didn't meet, so I can't take this trade. And then you just see the trade go straight to TP, and you're like, damn, I should have just took that trade.
Yeah. Yeah, exactly. Did you do like your own just personal technical analysis before you develop these indicators and whatnot?
No, no, not at all. Like, well, when I was using different strategies. Like, I was using a whole bunch of different strategies that were kind of similar to like what we do now,
Oh,
but
okay.
it was more complicated because I used like 5 or 6 indicators, and it was like I mentioned, there's too many requirements where like they wouldn't meet, and I'd miss out on good trades. And then when I finally get one that meets all the requirements, it loses, and I'm like, damn, if I would have just took off some of these requirements, I could have hit those other trades. Um, instead of just missing all those and skipping them and then waiting for this one perfect trade that never even came. So I didn't really have my own technical analysis before that. I generally was just using indicators to determine momentum, because I basically was doing everything without the zones. So, like, I don't know if you saw the original strategy, the the intraday strategy, the original one. Basically, what I was doing is I was just determining when market was trending. So if it was like green down here and I get a buy signal, then I just take that buy entry and pretty much just write it up. But then it got to a point where I was hitting some losses, and I was like trying to figure out like how could I eliminate those losses, right? Because I always wanted a high win rate. That was like main focus for me, and that's when I introduced these zones here. So that's where the real technical analysis really came in, because before I was just trading directly, like direct momentum. There was like no technical analysis really involved. It was just, if I see the momentum swing upwards and it's trending that direction, I'll take the buy entry. And it did work. I mean, it does work. That, like, don't get me wrong, it still works perfectly fine. But like, for example, here, like if you take the sell position right here, it probably would have, reached halfway, but not full TP. And then when I would hit the stop loss, I'm like, man, what could I have done different to avoid this trade right here? What could I have done to just skip this trade? And then I realized that there's zones that are like really important, because before I would always see people draw zones, and I'm like, where do they figure out where to put these zones at, right? Like, I'm like, everyone puts zones in different places. They're like, most of the time they're kind of similar, but they're not 100%. Like, they're not always at the same place.
Yeah, it's very subjective. It's very subjective. I watch a lot of different YouTubers and people do with their strategies and stuff. And what I've come to realize is most of them, like yours is based off of a algorithmic trading. Most of them is like go to the higher time frame and just find like the most touches somewhere, and then honestly, you just pray for a bounce realistically or a rejection.
Exactly.
Yeah.
Yeah, like I would see people do that, and I'm like, man, like I would do it myself, and I'm like, why doesn't my zones match up with theirs, right? Because everyone sees it differently, it's super subjective. So what I did was I started reading into like bank algorithms, right? Like how banks trade and stuff, and they trade at specific price points like all the time. Like they have specific price points. When price reaches this point, they have like an automatic buy or automatic sell. So what I did was I had my coder to like I gave him the data set. I was like, you know, this is my data. I use TradingView. This is my broker. I want you to I want you to develop an algorithm for me where it detects where price gets rejected from exactly. So like, for example, here we have like a 0.70209. So since we have a zone right there, I'm like, I want to make sure that that same exact price point, 0.7029, was tested at some time in the past, right? At some time in the past, it's been tested maybe one or two times, or two or three times, at least two times, three times better, you know, anything above that. So I gave him basically, you know, my logic, what I wanted, and then he coded it for me where basically the zones get drawn wherever price test more than two times in the past. So it has to test that same exact price point. It can't be off by even a penny. It has to be exactly on that price point. And then I started to realize that if I was able to identify that, I'd be able to basically avoid trading with the banks, right? Because you don't want to trade with the banks because you're probably going to lose if you trade with the banks because they can push price wherever they want to go. So that's how I was able to determine this algorithm where I can detect where the perfect zones are. Because you can see here, there's a ton of different zones we could draw. Like we have these zones right here, but in reality, if you're like trading like somewhere down here, you could have had an extra zone like somewhere down here. You could have had like an extra zone somewhere over here, and then that's where it gets messy because you're like, man, what's an important zone, what's not important zone?
Yeah.
Uh, and in reality, they're all important, but you want the zones that are like super important. You know, the ones that actually mean something. So that's pretty much how I figured out this indicator that I developed. And that's pretty much, I mean, I think the zones are probably the only real technical analysis that I really look at. You know, obviously I look at rejection points, which would, you know, fall in line with the zones. But other than that, it's just momentum, straight momentum using the momentum indicator. And then I use the zones for the extra confirmation just to prevent from getting caught in any like reversals or anything like that.
Speaking of, out of curiosity, have you ever like back tested or just entered like a normal person with drawing their zones? They don't have like a momentum indicator or nothing. They're just using like strictly price action. But have you ever just like back tested just entering directly off of the zone? So for example, like the 0.73200 to 0.72800, like yeah, where your mouse is right now, that area where it's bouncing, like have you ever back tested like this doing like multiple entries there and then just it gets to the next zone, sell it, gets to the next zone, sell it, then like I don't know, stop loss like halfway down or something? Or
Oh, like whenever it breaks it.
no, so like where your mouse is right now, like at the exact bottom there where it's touching multiple times, have you ever back tested just like entering exactly when it touches, like you put a buy limit here and then whenever it goes up to the next zone, that's when you aim to sell it, and then you would have your stop loss down here somewhere. Like for this box that you have your mouse on right now,
Mhm.
it would really only have been one loss when it dropped down really quick and then it came back up. But have you ever back tested that without using the momentum indicator?
Not necessarily. I mean, I've thought about that before, but then in reality, like I've thought I thought about trading that way because I was thinking about how, you know, how to scalp things. Like I was like, oh,
Yeah.
if I do that, like I'm sure that's what you were thinking too. Just scalp it, you know, have a buy
Yeah,
limit,
exactly.
scalp a few pips, which is, I mean, it's definitely possible. The only problem with that is that you'd have to figure out like where to put your stop loss, right? Because like for example here, if you put your stop loss like right below the zone, you probably get stopped out every time. So because it comes up, comes down. So you'd enter the trade and then it swings back down, and it would just stop you out 1, 2, 3, 4, 5, 6 times, and then maybe you have a couple wins right here, and it just keeps stopping you out over here as well. So that's something that can be done. The only problem with this is that how do you like I don't know, like how would I be able to determine that this is actually a strong zone? Because if I go in and back up over here when price barely got to it, it's really hard to tell if it's gonna break through it or that if it would even do something like that. Because like, for example, here, if you're looking at these zones right here, price breaks right through them. It doesn't respect the zone at all, right?
Yeah.
Same with right here. Like there's two areas where it respects it, but all these other times over here, it doesn't necessarily respect it. So like for example, right here, if you were to see price break into the zone and you see it come down and test, like I personally wouldn't know if this is gonna range like how it did right here, because this could have easily just came back down like that. And every time it came down, it could have stopped me out, right?
Gotcha. Gotcha.
So that's why I personally haven't back tested it, but I'm sure there's a solution to it. You just have to figure out, maybe like there's a sweet spot where you should be putting your stop loss when you're doing this. Cause like, for example, here, if you were to do that, say you entered a position like right here with like a buy limit and your stop loss is like maybe at like this other candle right here or something. If that was the case, then you would just keep hitting, keep making profits off that. One way that I do it personally that I think works better is when you use the pivots. So instead of that, this is how I would scalp. Whenever price comes down to the pivots, that's where I put my buy limit. So like right here, price comes up, comes down, I put my buy limit right there, and then I make profit off that trade. And then whenever it comes down again, like right there, full TP. And then as it comes down again, like right there. So it comes down again right here. Then I enter another long position, and that's how I would scalp it.
Okay, I was actually just back testing the pivots, mixed with some other indicators. I was doing the exact same thing, but I was placing buy limits on the orange line, or if it touched the orange line and then it went back up, or if it was gonna, I would put the buy limit right above the candle that touched the line that I was going to trade at. So like for you with touching the yellow line, I wouldn't put it exactly at the yellow line. I'd put it at the candle that touched the yellow line right above it. So it would have to swing back up basically to get me into the trade. And if it crashed down, then I just wouldn't get into the trade.
Oh yeah. No, I've done something like that too. I have it. Well, this is if you want like really fast scalping. If you want something where there's like more confirmation, I'll let it close below the zone, kind of something like this right here. I'll let it like swing below the zone and close below it, and then as it comes back up, I'll have like a buy stop somewhere right there. Have like a buy stop like right here. So as it swings back up, it fills the order and it goes like.
Okay, yeah, that's exactly what I was doing. That's exactly it.
Yeah. So that's like a little more confirmation. The only problem with that is that sometimes you'll get in too late or you'll just miss the move, right? Because it doesn't necessarily always come down like that. Like sometimes price will just like, you'll see a whole bunch of wicks off of the first pivot, but you won't see it actually close above it. So in some situations like this, like you make profit, but you would have missed like this whole move if you waited for this one right here where it actually closed above it and then it finally came down on this candle right here.
Yeah, I got you.
So, I mean, there's a lot of ways to apply it. It just really depends on how you want to apply it, right? Because like I mentioned, you could have done it where you're rejecting off the zones, or you can do it where it's rejecting off the pivots, or you can do it where it closes below the pivot and swings back up. There's literally like a million ways to do it. It just really depends on how you personally would want to do it. Because even though we're talking about all these strategies right here, it really comes down to if you're going to be able to execute. Because it's easy,
exactly, yeah.
Because it's easy to talk about. Yeah, it's easy to talk about a strategy and look at the results and you're like, damn, this really works, right? But when it comes to like doing it for real, you're like, you freeze up or something. You're like, oh man, I don't know if I feel comfortable with like with doing this and stuff like that.
Yeah. Well, I think like with you, like that's why I love the that you like record all the, because results speak for themselves, and you can't argue with results. And I was running some numbers like theoretically, if someone just had, let's say, like a $10,000 account or $15,000 account, and they started at the beginning of the month, and they took every Forex trade that you mentioned, even with a standard lot, they more than likely would have that same profit at the end of the month, since it's not like they would lose all the money. So as long as they had enough money to go through all the drawdown, like recently with the one trade that hit Euro USD that hit stop loss, is if they took every trade, so they would have lost 700 on that one, and then they would have won GCAD, GNZD, and then the other one. So you technically, even with just $10,000, you could have that same amount of like the $100,000+ at the end of the year, as long as you were able to take every single trade with the same exact lot size and whatnot. Because honestly, like going to like a Forex lot size calculator and then back to your broker to enter the trade, it really doesn't work. Like it's different for you because you use forex.com and I was using them, but the spread on MT4 is ridiculous. It doesn't make any sense at all. And for some reason, they don't have like a commission MT4 account. So you'd have to use, I could use Forex.com, but like when I was trying to do the Telegram copier thing, then it didn't work with that. And I know some guys said it's not that hard and you can do it. I highly doubt that because I was doing testing on it. There's just not enough time to, the alert comes through and then wait and then go to the app, especially if you send multiple signals, then go to the Forex app thing and then do the lot size calculator and then go back and then enter the position. There's just not enough time to do that. Unless you were taking the trades and you were finding them by yourself, it's a lot different. And that's what I came up with, that if I could identify them by myself, like you were saying, maybe I'll just use my phone and I'll just do like zone to zone since the position size doesn't work. And then I could,
Exactly. Yeah, because the non-commission accounts, I think you have like double spread because that covers the commission, and you might as well just pay the commission because you're pretty much doing the same thing, but it's better to have a tighter spread so that you can get in and out of the trades. Because when you add like double spread to it, it's like, man, it's gonna be impossible for you to get any profit, and then impossible for you to get out of the trade because you got to pay the spread going into it, and you got to pay the spread going out of it. And I'd rather pay the commission to get a tighter spread than have to risk, getting like trapped in a trade basically because you missed the spread by like 0.01 pip or something like that, which happens all.
yeah, it's very different because on the phone with TradingView, you can't execute on your phone like using the app and using the forex.com like you can on a computer. And I was like, well, that's a bummer, so I'm gonna have to go to MetaTrader anyways, and I'm not about to pay that spread that they have for forex.com. And I tried seeing if I could like work out a deal or something with them because on their app it says they have something in the works, but they like didn't know when it was going to be readily available and whatnot. So I was like, okay, I'll just do a different broker and accept the risk, and then just try to find the trade by myself. Because if you find the trade by yourself, or it'd be finding the same trades that you find, then you could do your position size calculator. Because there's just not like the two trades yesterday, they just moved so quick, and you personally can't help that. The market's going to do what it's going to do.
Yeah.
So that's why you just gotta find the trade yourself, and then you can do a position size calculator, or just do a set risk, not set risk, a set lot size for each trade. Because when I was doing it, I was doing like just 0.5s, and I would just do that for every trade. So even if like one was 70 pips or 80 pips, and it was a little more money risking, is if I took every trade, then it would even itself out. Because if I'm doing 0.5 every time.
Exactly. Yeah, no, I agree. It would just depend on which pair. Like for some people, they just like to trade a certain pair. Like if all you trade is eight AUD USD, then you'll know exactly what lot size to use. It only gets messy when you trade pairs like EG, like GN, G8, because those cost a lot more to trade in comparison to like UJ, like GJ, something like that.
Yeah.
That's where it just gets a little weird. I mean, it's not that huge of a difference either. It's only probably off by like a 0.2 or 0.3 lot size that makes it different depending on how big you're trading. But yeah, it does make a difference if like you're trading like 24 pairs, because on our watch list we have so many pairs, and that's just what makes it a little difficult to follow.
Well, I was going on average that most standard lots are ranging between $7 to $10 per pip.
Yeah, it's around there. It's between $7 and $10. So depending.
Yeah, so I figured, well, if you do a 0.5 either way, then and you as long as you take every trade, it'll even itself out. If it's if it's this one's worth 7, this one's worth 10, and etc.
Exactly, yeah. Because usually our trades, when we're taking something, they usually correlate with another pair. Like if I'm trading AU, I'll probably be trading another AUD pair as well. Like, and if
Yeah,
I'm trading like EU, I'm trading like EN as well, or GA and GN together. So it doesn't make a huge difference, but yeah, I mean, it's just a slight difference. But if you do take every trade, it's almost bound to balance out because you've seen the results. We'll always have like more wins and losses.
exactly. And as long as it's more wins than losses, and you take every trade, then it will balance itself out. Whether that
Exactly.
was a 0.5 lot or a 10 lot per trade, as long as you have the breathing room to go through drawdown and whatnot, then you would be perfectly fine.
Yeah, I think that's what it really is. I think a lot of people just over leverage, and what happens is they get margin called out. They don't realize they're getting margin called out, and they're like, "Oh, I lost this trade." And I'm like, "We're not even close to stop loss." Like, what do you mean you lost a trade?
Yeah, exactly.
Hmm.
Exactly. All righty, I think you answered all my questions. I think with FTMO, I just got to get back to only US 30, and then maybe I need to do some back testing regarding scalping and whatnot. So I brought the account balance since I took all the US 30 trades. It got up to like 103,000, and then the loss, and then I did some scalping and it went down, but it's still above 100,000. And I was like, well, I might as well just wait till the end of the month for the account to expire, since it's still above 100,000, then they'll just give me a free challenge, and I
Exactly.
can do this every month, to be honest, until I actually pass it. So I think that's what I'll just do there, and then like you said, I'll just use my phone, and then as soon as it breaks the zone, I'll just instead of using the position size, I can just like enter at market and go like zone to zone or aim for 50 pips at a time or something like that. So,
Yeah, exactly. No, I definitely agree. I think you're probably better off doing that. That way you can, obviously just take another account, because it's better to just get a fresh new account, reset it, and then have a better month next month, rather than try to risk, passing it from now. And
yeah,
you're the challenge, right? So it shouldn't be too bad.
yeah. I'm still in the challenge. I'm actually starting to work overnight at the end of this month.
Hmm.
So I don't know if I'll actually be able to stay up for the US 30 ones. I might have to start taking the UK 100 ones, since I'll be on overnight for like 4 months and be working 9 p.m. till 7 a.m., 8 a.m. my time.
Damn, what
So
kind of
actually, I might be able to do both, because that'll be right about when you're waking up and calling the trade.
Yeah, no, that might work for you, because then yeah, you'll still be, if you just like stay up, because that's what happened with like a couple other guys. Like I think Ark from the group, he's like a truck driver, so he would be.
Yeah. I talked to him a lot
Oh yeah, Ark's cool, man. Yeah, he
actually
finally
for
made.
for motivation about his FTMO, and I talked to Mark too, since he
Oh yeah, Mark's failed a bunch of FTMOs, but he's finally up, so it's good.
yeah, I know he has like three now. I'm hoping not to fail as many, because currently, and I mean they were all my fault, because we talked about the whole scalping thing, and I thought I could do the zone to zone thing, which I mean technically it did go my direction, but those wicks seem to just hump me every time. And I think that was the big problem with my stop, which because looking back, I was like, if I did a 1-to-1 risk, I would have won every trade. But I was trying to do like these other traders where you can do like, a 1-to-4. And I'm like, oh, if I can get this 1-to-4 and I only risk $1,000 here, one, I have to lose 9 other trades to fail. And if I can win this one, then I'm already up. I'd be up $4,000. And that wick, man, it just taps the stop loss, and then it goes right back up every time. So maybe I should just do a 1-to-1 and test that out with scalping, because I was scalping the ES or S&P 500, and I was doing something similar, and same exact thing. Those wicks, it would just tap the stop loss and then back up. But that was because I was doing like a 1-to-5 type thing. If I did a 1-to-1 and it was the same risk to reward, because even 1-to-1, if you only risk 1,000, I'd still have to lose 10 trades in a row. But I don't
Mhm.
know. Maybe it was just my greed. I've been doing this for 2 years. I think I'm beating myself up a little too much, because I just started Forex like 2 months ago, 3 months ago. And it works, like I was saying, it works very much different than futures and whatnot. It doesn't, Forex is a ranging market, and sometimes it trends. Futures is a trending market. And stocks is a trending market. So maybe I'm being too harsh on myself with trying to get it down so quickly in only a couple months.
Yeah, exactly. And that's the reason why I usually like to just ride it from zone to zone. Like you'll see people that try to go for like 200, 300 pips, but like most of the time it doesn't really work out like that. You can get the same amount of pips if you just go from zone, exit, wait for it to break the zone for that confirmation, and then do it again, right? Because then you just add those zones. You hit like 3 zones, that's like 300 pips already, versus just taking one big position. And a lot of people that take those like 1-to-4, 1-to-5 risk reward, they like their winning strategy is not, it's not a high win rate. So they'll take like maybe like 10 L's before they have one win to cover all their losses. And then they're
Yeah,
just making break.
exactly.
And that's not a wrong way to trade, but it's just not the way that I trade. Everyone trades differently. And
Yeah.
I'd be wary at like looking at people that do post results like that, because I see people post results like that all the time. And it's funny because when you ask them to like actually show you how they identified it, because you'll see the screen looks it's so clean. It's like they were just on point. And then you ask them how to show you, and then they show you, and it like makes no sense. You're like, there's no way you like identify this top right here.
Yeah, exactly. Like they catch the exact top or the exact bottom. Like I'm sure you're seeing like right now the whole like Wyckoff and institutional trading and big bank trading is like really the big wave right now that everyone's doing. And I was looking into it and watching videos and whatnot, and it's just super confusing to be like determining what can be considered an order block and everything like that. because I was looking and I'm like they're saying this is the only way to trade, but like you, for example, you still make a lot of money and you're still you're still trading what people consider like retail trading, zone to zone thing, and like Q
Mhm.
banks and Swaggy seeing these people. So I'm like, this clearly can't be the only way because it's just a lot that goes into like the Wyckoff method with, oh, here's the up thrust and things like that. Because I was YouTubing it trying to figure it out, and I was like, nah, this is just too much of a headache to try to learn to try to catch those big moves, rather than just do a one like this strategy, a 1-to-1. As long as you take every trade, then you'll still make profit at the end of the month.
Exactly.
Um,
The win rate's high. Yeah. I feel like a lot of those strategies are just being hyped up. Like I feel like it's a lot from like those like network marketing groups, they find something that can be like easily manipulated because like you see all these people that are in those network marketing groups, right? Like they'll believe anything. If you show them something that looks like it works, they'll be like, oh, this is the holy grail. Like, and it's been
yeah,
around.
yeah, the IML, the Bollinger Bands is the big one right now. I was looking at traders using trading Forex with Bollinger Bands, and they were saying like, oh, it gets to the bottom of the band and you buy it. And I said, the issue with that is like it can ride that bottom of the band for a very long time before you actually know when it's exactly going to bounce and stuff. And they were like adding in Fibonacci's and stuff, and the Fibonacci's here work different than they do in futures. And like you were saying, it's very you really can't know Fibonacci's until the full move is actually. So
So,
for example, like this on your screen right now, that last candle that broke through on the bottom zone, it's that green candle, the lowest candle that it went to. Like you would have started Fibonacci there, and then you would go to this really long red wick right here. That's how you would do that Fibonacci.
yeah, this one
And
right here.
yeah, exactly. That's how you would do it. So, but like you wouldn't have known this until it actually happened.
Exactly. And that's why I personally don't like the Fibonacci because the thing is, if you're following this from here, this could have been your high if you're looking at it from this point right here, right? Like
Exactly. Exactly.
it's super subjective. There's no way to really know where the actual high was. Like for right here, you probably wouldn't even identify this right here. Like if I was looking at this right here, there your Fibonacci just keeps adjusting every time it moves higher. Right? It just keeps going higher and higher. And it's like, all right, how do you know when it's the actual high? Like even right here, it's like, how do you know that this is the actual high? What if it keeps going higher and higher? Because like right there, you're like, all right, this is the high. All right, no, this is the high. And
Yeah,
it's
exactly.
you'll never really know, and that's why I don't use a Fibonacci. I prefer to use the pivots instead because like the pivots look just they move just like the Fibonacci. That's something that I noticed from a couple of people in K2 that have mentioned it to me. They were saying that the pivots are basically just a dynamic Fibonacci. Like these are basically like the levels of a Fibonacci when it comes out to retest.
Yeah.
Except instead of you drawing your Fibonacci from there, you're literally just following the pivots as it moves along with it. So you don't have to do any actual work, right? It just keeps pulling up and then it swings back down. Kind of similar to how it is for the
That is very true, actually. That's very unique. I'm
yeah.
gonna have to look into that.
Yeah, because like for people like how we just mentioned, you have to keep adjusting it, right? So like for example here, you keep adjusting it and it comes down and then it swings back up. But instead of using this, you just mark it up right there. This red line, the first level of the Fibonacci lines up perfectly with the green line of the pivot. So literally every time it moves down, it lines up perfectly. The green line where it comes back up is going to line up with the red line here, the first level of Fibonacci. And then you
Yeah.
can the green line right here lines up with the yellow, the 0.5 over here lines up with the orange, right? So it just like pretty much adjusts automatically as it moves forward.
Yeah.
It's like one way to do it. One guy in the group that's like really big with Fibonacci's, he's the one that mentioned it to me, and I was like, oh, I didn't realize because he thought I based the pivots indicator off the Fibonacci. I was like, no, bro, I don't even use the Fibonacci.
That would have been pretty cool if you did, though.
Yeah, exactly. If that was the case where I based the indicator off Fibonacci, then it would make sense. But for me, I was like, oh no, I'm just doing this off like moving averages because generally moving averages will indicate where the rejection points would be on a shorter term, especially for this because these are like EMAs. They're not like normal moving averages because the normal moving averages move too slow. The EMAs
Yeah,
move.
the simple moving averages. Yeah, the exponential ones are much better. That is another thing I've noticed is a lot of traders they use like the 8, 14, 9, 50, 200. One thing with that is like I felt like it well like you've already this would be easier because you've already done back testing yourself because with those you would have to actually add them all in and do the back testing on where it's supposed to bounce at because I know a lot of people they use that for the like 50, 100, 200 for US 30 as well, instead of like zones and whatnot. Which would
Mhm.
be similar to the pivot strategy on US 30, since support and resistance is dynamic and fluid. It's not like concrete that it has to come down here. Because that was another issue I ran into where I was like, I won't take a trade until it comes down to the zone. And sometimes it can come down like half a pip, or just a couple pips shy of it, and then it would shoot back up. And I'm like, well, if I would have entered, but that's the greed that sets in. Because I'm trying to master the peso because I love the peso. I really do.
Mhm.
And that's what I fell into that today, where like I caught it at the actual this big drop right now. If you actually pull up the peso, that huge drop, like I paper traded it, but I also entered it on my FTMO, and I caught like $500, and then started going up a little bit. So I got scared, so I entered or I exited, and then it literally dropped all the way back down to where I assumed it was going to drop to.
Yeah.
And then it started going back up. So I'm like, oh, this will be a long position, but I didn't get in at the bottom, and that's what messed me up there. Because if I got in at the bottom, then you can enter with bigger lots, and then as it slowly creeps up, then you can scale out and add like a couple lots here, a couple lots here. Because I love the amount of pips that is. So I was looking into trading exotics actually, because they just move so many pips. If you can catch those pump and dumps, because it really is manipulated the way it moves, these long wicks and whatnot, but it's clearly in a downtrend. So, because I watched another video or webinar you did the other day about that it kind of does move smoothly when you look at it from like a top down analysis. So I was like, oh, maybe I should try to trade in the peso more.
Yeah, no, definitely. Exotics are actually really good pairs to trade, especially for Forex if you're doing the zone strategy, because since not as many people are trading it, it's not as manipulated as like any other pair, because they pretty much just take their course and they just keep going in that direction until the banks are like, all right, let's fuck with this market today. And they're like, all right, split the peso and let's push it.
Yeah, yeah,
But for the most part, they're not really, it's unbothered. You can trade the peso, you can trade the US dollar, Singapore dollar, you can trade the Turkish lira. And they're usually not like, if you look at them, they move pretty smooth and they're not really getting manipulated like every day. Like if you're looking at like AE over here, you'd be like, okay, this doesn't make any sense, because it comes up, then it consolidates randomly in the middle of nowhere, comes back down, and then shoots right back up to where it was supposed to go. So it's
yeah,
like that. I mean, it's something that you'll notice like over time, but it's something that definitely it just comes with practice, because it's just like what these zones are doing in reality is that it's training your eyes so that you can identify this even without the zones. Like even for me, I'll be able to identify these rejection points like right here and up here, and I consider this like a huge range. And I just turn this on right here, and I'm like, oh, it lines up perfectly because we just have this middle zone here. But in reality, this is just a big range right here within this area.
yeah. It's ranging currently, and that's
Yeah.
exactly what I was talking about when I said like the whole like using up channels, down channels with forex pairs doesn't really work, because it's really just a ranging market, since it's this currency versus another currency. And the people who do use them, I, I gotta think that like they only have like certain pairs that they use it on. Recently, what pair was I looking at? I think it was like I think it was NZD or something like that, and it was clearly in an uptrend for months. And I was like, oh man, this would be beautiful. Like if you had like using trend lines and stuff like that, perfect. This is exactly what I'm talking about. This is clearly an uptrend. Like this would
Mhm.
be a beautiful channel. Just buy at the bottom of it. But like it definitely doesn't work with all the forex pairs, because some of them they just range, and that's
Oh
how you
yeah,
get trapped in
definitely.
drawdown.
And it'll range forever, bro. Like like you'll be using it, you're like, damn, this thing does not stop. Like he just keeps going and going and going and going.
Yeah, exactly. And
Exactly.
that's what kicked me out with some of the trades when I was using trend lines. When I was like, why is this not? This is supposed to be bouncing right now. It touched the bottom. It's touched 3 times before. It should be going up, and it just ranges. So realize that's not the best strategy to use for this. Another question, and we talked about this. Um, you don't recommend like trading like certain pairs for certain sessions. Like I know a lot of people say trading like the GBP pairs for New York session are the best ones, since they have like the most volatility and whatnot.
So since I trade on the 4 hour, it doesn't really matter, because you could enter a trade like, say, like something like this right here. This broke structure like at 2 a.m. and it's NZD Neither of these markets are open, right? The NZD market's closed, the JPY market's closed. So you could take this trade here, and then once the market actually opens, like, whatever session it's for, like right here at 1500 hours, you can see that there's a huge, spike of volatility around this time. Once we get into like US session, into Asia session, and it'll eventually, volatility will pick up if you're trading on the 4 hour. The only time that I would focus on trading a specific pair during a specific uh, time session would be if you're scalping or if you're intraday trading, because that's where you want the most volatility for you to get in and out of the trade. Because it becomes dangerous if you're trading intraday and you take a trade like towards the end of the session and then you hang on to it through like an entire day, where it can easily reverse on you at any point in time.
Yeah,
So,
that's what I ran into when I was scalping US 30. I ended up trading it during Asia session.
oh, don't do
Oh
that.
my gosh, I hate Asia session so much. Nothing moves at all. It's literally couple pips up, couple pips down, couple pips up, couple pips down. Oh my goodness. Like I've heard about the session before and I never really understood what people meant because like I've didn't really trade Forex before. And when I was in that session trying to trade it, I was like, this doesn't make any sense at all. Like it just keeps touching the same points over and over, like no sharp move up, like to give you a clear sense of direction. So then that's when I was like, okay, like New York session only for if I'm trying to scout US 30. I guess I
Exactly.
could look at the OS 200 though for Asia session.
Yeah, exactly. Yeah. Yeah, because during Asia session, you could literally just be ranging for like the whole like 8 hour session, and then all of a sudden London opens, and then it ends up spiking one direction or the other, and you're like, damn, I should just waited for that confirmation in this next session, and I should have taken it at that point. But you never really know. Sometimes you'll get lucky, sometimes you won't. But yeah, for me, the way I like to trade, I like to be for sure. Like I want to know 100% it's going to be moving that direction. So if that's the case for me, then I would just wait for, the right time to trade it. But I mean, it's really up to you. If you like taking that risk and not knowing 100% and being 50-50 on it, then that's cool too. But for me personally, I want to make sure that, I'm on point with all the trades, especially with like FTMO, because FTMO is like something that you can't really play with. You make one mistake, you could be in the hole for like a whole week.
Oh yeah, I definitely learned that with FTMO with how quickly you can lose your profit. And it really is a big psychology thing as well that you were saying that it really comes down to like a risk management thing as long as you have a good win rate with your strategy. Because I was looking at YouTube, there's this chick and she only has a 30% win rate, but she passed FTMO because she'll lose 1,000, but that next trade she wins $3,000. So I'm like, it really doesn't matter about the percentage as long as like you have a good psychology and you have a good system that works, and the way you're entering and stuff doesn't really matter as long as it's consistent risk, like you were saying. Because I was like, how does she pass with 30% win rate? And she only traded like a couple pairs and she passed it. And I was like, wow, that's amazing that she was able to do that. Because I talked to you, I was thinking about just taking the Forex trades on the FTMO, because then definitely, you can just enter with two lots and you don't even got to worry about using a Forex calculator. You can just enter with two lots. One, it'll be positive at the end of the month. And two, you can always ask them if you can hold the trade over the weekend. And if not, then you just exit it with a couple of pips profit. And with one lot or two lots at $10 per pip, you only really need 600-700 pips per month, and then you would pass the challenge. Because I was like, wow, these forex trades really are hitting quite a bit. If you entered a couple positions, one lot, two lots, then you do very well. Actually, even if you entered with like 4 or 5 lots and you risk $1,000 or $1,500 like the US 30, then that would probably be beneficial as well, since like the forex trades have a high winning percentage as well, not only just US 30.
Exactly. Yeah. I was thinking about doing that too, like maybe just taking the Forex trades with a smaller lot size and then just letting them run to full TP. Because in reality, we hit so many full TPs like this these past 2 weeks. I was like, damn. I like thankfully I've been taking them on my personal account, and that account's just been going pretty nice.
Yeah,
But
and you can always message the FTMO people or the person who's helping you out with your account and ask them if you're allowed to hold it over the weekend. Because I realized like before I didn't want to do that because I was like holding over the weekend, and then I was looking back and I'm like, wow, not that many trades you actually hold over the weekend though. So it probably wouldn't be a bad idea.
yeah, exactly. Because it only happens like once every couple, like maybe once a month or once every couple months where that happens, where we have to hold it, over the weekend. But in reality, most of our trades usually close within a couple hours, if not like within the day or so. So it's not really a huge deal.
Yeah, no, the first issue I ran into that I had told you about was like splitting the position up into, like, let's say I'm doing one lot, 3 positions at 0.33 per position, like the profits, and then scaling out, just it was just too small. So I think it would have been better to go like with a one lot or a 1.5 lot, and then instead of splitting it up, I would just slowly scale out of the position. I was doing
Mhm.
like 3 different 0.33 positions, and then, oh, this one hit TP1, I'm exiting, and this one hit TP2, now I'm exiting and stuff. It was only like 20 bucks, 30 bucks, because it's such small position, instead of doing it the other way. So that was the first issue I ran into.
Yeah, exactly. And there's like a couple other people in the group too, where they just take multiple positions. Like they'll take, how we have three TPs, they'll have three TPs as well, or three separate positions. And then they'll just have a different lot size for each of them. Obviously for the closer TPs, they'll have a bigger lot size. For the middle TP, they would have like a middle lot size. And then for the full move, they would have like a smaller lot size. And that works too, but I just feel like it's a lot of work because you have to enter three separate positions. And I'm like, I get so confused. I probably would like mess up and not put a stop loss for any position and then end up blowing my account at that point.
Yeah, that's another thing that I ran into with, like, I don't know. I got cocky and I was thinking some position, looking at some trades. I'm like, this has to go up. It just touched the bottom of the trend line or bottom of the channel or bottom zone. It has to bounce up. So I'm like, I'm not gonna even use a stop loss. I won't even look at it. Matter of fact, and I did that with one FTMO account. And when I woke up in the morning, it was down like 20 grand. I was like, oh my.
Yeah, that's crazy, bro.
Yeah, I learned quickly about, always have a stop loss, because you never know that. You just never know. It was bad. I couldn't believe it, actually.
Yeah, there's this other girl in the group too. She does a mental stop loss. Like one of these days it's gonna burn you, if you keep doing that. Because she was
Oh,
like, oh,
yeah, I know who you're talking about. Yeah, me and her have talked often, actually. You
yeah.
talking about the one who scalps a lot.
Uh, not maybe it might be. I don't know which one you're talking about. Are you talking about Cheryl or are you talking about Jalicia or?
Her name Trade Like a Sniper.
Yeah, that's Cheryl. Yeah, so Cheryl does that. It wasn't her. It was someone else.
Oh,
It was another girl that it was for the US 30 position yesterday actually. Oh, the one that hit stop loss. You know how I hit stop loss and it went straight to TP.
yeah.
So because like, she asked me like, "Oh, are you still in position?" I was like, "Oh no, I hit stop loss." Like it spiked down and then it shot right back up. And she's like, "Oh, okay, cool." Because like she was like, I had my mental stop loss there, and I forgot to take a look, and then I saw the spike down, but now I'm in profit. I was like, "The hell? Like you're in profit?"
That's funny. Now Cheryl's really good with her scalping and whatnot.
Yeah, no,
Um,
I've seen her profits. She's been killing it. It's been
yeah,
she's on
yeah. I
point.
messaged her a lot in the beginning when she was doing the intraday strategy, actually, because she was
Mhm.
making just such crazy profits with it. I was like, how is she making these crazy profits? Like, because I was doing my own back testing on the with the intraday one, and I was like some of these alerts, they come at once. Like there's no way you can analyze all of those pairs at once. 5 alerts come through, you have a minute to enter. So I was asking her about it, and she was telling me how she was doing it and whatnot. So very, very interesting strategy and stuff she was doing. But yeah, definitely not my cup of tea right now, because maybe I just haven't gotten the scalping thing down just yet, because she does it and she makes it look so easy. Like, oh, this is all you have to do. Just enter with a lot here. This is all you have to do, and then exit it here. And then when I try doing the same thing, it just never works out. It's always stop loss every time. So
Exactly. Yeah. No, I agree. Like scalping, it just really depends on the person. A lot of the times when people scalp, they really don't know what they're doing. They're just trading off emotion. Because I used to trade that way too. I used to make a ton of profit trading off emotion from scalping, like using some strategy, but mostly emotion. Because I'm like, okay, this looks like a good trade. I just enter right there and there, and then it hits. But at the end of the day, I'm like, I don't really know how I did this. Like I knew how I did it, but I don't know how it actually worked, right? Because like when you apply the pivot, sometimes, like I mentioned earlier, it's not always going to reject off the pivot. It could easily just like bounce off and then you take a loss. But like on some days, you'll just catch those days where it's just trending super heavy and you can literally just take every trade and just keep hitting those profits back to back to back.
yeah, I think something that I was running into was, like, I was getting greedy because I was trying to do my own back testing on the pivots as well. And I was like, man, it's like not trending for long. And I think the issue was, like, I expected it to be trending, for like
Forever.
days or months at a time so I can catch so many trades. I'm like, no, I think that's the issue. Like sometimes no trade is still a good trade. No trade means you don't lose any money. So I think that was another issue I was running into. I was like, oh my gosh, like no trade today and no none yesterday because it's all freaking ranging right now. This is so annoying. I hate these pivots. I hate this dude. I feel like he ripped me off. I No, I think that's what it was. That like, sometimes you just gotta wait for it to get out those ranging markets and then just get back to trending and then enter off the pivots. Because I did use it for a little bit and it was working decent, and then it started ranging. And I think I was just getting greedy, because I've been doing just investing in the trading world for a bit now, and like I get so close to making heavy profits, and something always happens. Like especially when I listen to other, like I traded options before, and I was in some Amazon calls and Tesla calls, and I kept telling everyone I was like, it was 2 years ago, 2018. I said if Amazon does good earnings, it's going to 2,000, and I had called when the price was 1,700. I bought like 1,800, 1,900, and $2,000 calls. So I put in like 2,500 or 3 grand. And then I was up. I bought calls and then I bought a couple puts to hedge it. And I was up and I kept telling people. And then I listened to this chick because she traded like 2 more years ahead of me. And she said earnings is a gamble. And I was like, all right, I'll just get out with a 30, 40% loss. And it freaking shot up to 2,200. I was so pissed off. This dude turned $6,000 into 100 grand. And I was like, that could have been me if I would have listened to myself. I was so pissed. I never spoke to that girl again, actually. I was so pissed off. Couldn't believe it, man. Because I sold it like a week before earnings. I was like, if I would have just waited, if I would have just said, no, I'm going to listen to myself. If I take the loss, I take the loss. And yeah, haven't really traded options since that day either, actually.
Yeah, options is dangerous. You can make a lot of money, but you can lose a lot of money too.
Oh, yeah, you really can. Because there's so much that goes into it instead of just, oh, it touches the bottom, put a call on it. It's about the value, what other people are thinking, freaking Greeks. Oh my gosh, so much. But you can make crazy profits.
Yeah, like whenever I see option, well, because I used to trade options before too. Well, I used to trade stocks and then options, and then I came to Forex. I was like, when I got to Forex, I was like, why didn't I just trade directional every time? Because like options, I feel like options is a huge risk because sometimes you'll take a trade and then it'll pass your strike price, and then right before expiration, it drops right below it, and you're like, what the fuck?
Oh yeah, yeah, definitely. They really are manipulated just as much, if not a little bit more, depending on like your strike price and whatnot. Like I look at some of them that they're like Tesla. I don't know if you're looking at like Tesla calls right now. It really just is a matter of time before Tesla has sell off that it's supposed to have. Because like the only thing people are using to predict Tesla price right now is Fibonacci's and whatnot. It just keeps going up and up and up, even after the split and whatnot. And I'm like, wow, like this has to be unsustainable. And so many people are becoming freaking Tesla millionaires, and they're really just buying random calls. Buy a $1,500 call. Like if you look at them now for calls for later this year, $10,000 a piece. And I'm like, wow, that doesn't make any sense at all. That call is worth that much money, and it's because like it's just unstoppable right now. Like it seems there's no end in sight on where it's going to actually have a drop at. So
Exactly. It's kind of similar to like the Dow, like there's no way that you would anticipate the Dow to keep pushing up during a pandemic. It's like it's artificially being pushed. Like people are just hyping it up and it just keeps getting pushed higher and higher and higher. Uh, and it just doesn't make sense because like, companies aren't doing so well. I mean, companies are doing all right now, but they're not doing as good as they could be. Like I feel like the growth this year was like, even better than it was like during normal times.
yeah,
So it's super confusing when you're trying to determine, what's legit, what's not, when is it going to come down and stuff like that. Because it's really like that's one thing that I've started to realize a lot this year. I started to realize that it's all based on the psychology of like retail traders, right? You just want to do the opposite of what they're doing because that's what the institutions are doing, really.
Yeah, the
So
Mark Douglas series is beautiful about that because he's like, there's really only two things that push up or that move a market. Well, what was it? It's your conviction versus their conviction, and whoever believes in more is the way the market ends up pushing. Because he was talking about how like he doesn't believe in technical analysis, anything like that. Because he heard a story about he was talking to some a technical trader was talking to some dude who was super rich, and the dude was like, "This is the law. This is the absolute law of the day. It has to bounce here." And the rich dude literally called, and he was selling soybean futures, and he literally sold like 2 million barrels at market price, and it plummeted. It plummeted the price, and he was like, "If I can do this, then anyone can do this." And he was just going to show that like it's your conviction versus their conviction. There's nothing that you can know or do that you have absolute certainty that's going to move the market. You just have your system that supposedly gives you an edge that when this happens, this should happen. And then if it's a 60% win rate, as long as you enter every 10 trades, you're going to win 6 out of 10 times. So he was saying like people who try to call the bottom and things like that, like it just really doesn't work. So,
Exactly, yeah. And that's why I never trade technicals either. Like how I mentioned in the beginning, I just trade momentum. It's the same way that we just discussed, like with a millionaire. He trades momentum too, because he's just waiting for momentum to swing in a certain direction or to give hints that momentum is going to swing in another direction. And then you just ride that momentum swing. Because the thing with technicals is, I mean, it really depends on what you're trading. But like how I trade this, K2SR strategy, I have a system in place. And whenever like it meets, like for example, right here, like when price breaks structure, there's only one way price can go. It can either go up or it can go down. It can go sideways for a bit, but eventually it's going to go up or it's going to go down, right?
yeah, exactly.
So that's why, whenever I make a call and people always like, one thing that I hate is when people ask for updates on a trade. I'm like, if I didn't think it was going to go up, I would have never called that trade. But people always ask like, oh, so what do we do now? What do we do now? I'm like, nothing. Literally just wait.
Yeah, I was watching this dude. Someone introduced me to him. His name is No Nonsense Forex on YouTube, and he speaks about that with like that people who get into this Forex game. And he hates technical analysis stuff as well. He's all about finding a system and indicators that work for you. But he talks about like people don't have psychology or discipline. And he's like, let's say you're in a Forex trade and your stop loss is 150 pips and it's down 130 pips. Like what should you do? And he's like, the answer is nothing. Like you accept the risk that it's going to go to 150 pips and you're out the trade. You just wait. He was like, so when you get into a trade, you enter it and then you go about your day. It's either it hits the full TP or it hits your stop loss, and that's it. Don't. It's like when people get greedy and they want to exit too early, that's when you screw up your system and you're not letting it work the way it's supposed to work and stuff. He reminds, or you remind me of him with how you say like you get in the trade, like you only trade on the 4 hours so you can go about your day, so you don't have to stare at the chart all day. Either it's going to hit your profit target or it's going to hit stop loss. That's at the end of the day, that's it, so it's 50-50.
Yeah,
So
exactly. It's funny because now that you mentioned him, he's actually the guy that kind of made me want to create these indicators that cover all aspects of trading, basically the technical
oh
analysis.
wow, so you know who he is.
I know exactly who he is because you've seen his videos where he has a system as well, but he doesn't tell you which indicators he uses.
Yeah, he wants you to do all the back testing and stuff like that. And I did go looking into using different indicators and stuff on it. They're just like, and I don't know if this is just me being lazy. There's so many indicators to be testing and all those hours and whatnot. I think he said he did 10,000 hours of testing or something. And I was like, oh man, that's a lot of time to be. But I mean, it's worked out very well for him. He's very profitable now. But that's so much testing and whatnot. Especially if you do it on like if you did it on all the pairs we have in this watch list, that would take forever. Maybe when I was 18 still, or when I was 16 or something.
Get a lot of extra time, right?
Yeah, but now like no, because I've seen some of his YouTube videos. People in the comments, they actually have their own system and they pass FTMO with it. But you definitely have to put in the work and whatnot to find which indicators to use. Because he gives a couple of them, like the ATR is one he gives, and then he mentioned like the Arun up. He didn't use the Arun up and down, but it was a similar indicator. But he uses the same thing where he's using momentum because he was like reversal traders are basically losers, with like trying to use trend lines and stuff to predict it. He's like, no, use it. And it's similar to the momentum indicator. He's like, find the momentum. This is saying it's going up and stuff.
Exactly, yeah, and that's pretty much where I pulled all of the different aspects from because like originally I was only using the momentum indicator, and then after watching no nonsense, I started to realize that I need to have a trend indicator too, and then that's when I created the trend meter, and then I figured out like the most important things is like determining structure so you can avoid losses, and then the momentum. So momentum's number one, obviously, so you know which direction to trade. And then the structures are the other important thing because you want to know where not to trade. So those are the two main things that I pulled from watching his videos. Because I was in the same boat, bro. Like when I was first creating the K2 indicators, I had the momentum indicator. That was like this was like my holy grail, right? And I was like, I need to make it better so that I can avoid losses. That was the main thing. It was like increasing the win rate. And then that's when I started like implementing these new indicators and then implementing them to new strategies as well. But yeah, no, it's cool that you follow him because I was actually thinking about like having him mentor me at some point, like before I started K2. But I was like, no, I'm just gonna do this on my own because this way I'll be able to actually learn stuff. And
yeah, there are some things you definitely just have to learn on your own,
Mhm.
instead of like finding people. Because that's what I've been going through over the years with finding different people and all these systems and strategies and indicators and things like that. and like they don't really show like how you show the results. So like no one can say, oh, it only worked for you. You clearly have the results. You know, most of them they don't show the results or things like that. They really just show like their own profits, but not like all the losers and the winners and stuff. And that's why I was like, you know, maybe I just got to figure this out on my own. But when I saw these results, man, I like, you know, like how I paid for advance for the subscription. Like I had to. I was like, man, you know, like if I just took one lot for all the Forex trades for 1 month, then I've already made back my entire subscription. Because like I said, you know, the results speak for themselves. You know, like there's no arguing with that.
Yeah,
So
exactly. And that's why I started going live too, because you know everyone always wants to have like they are like, oh well, like my results are so like accurate that people never believe it. So I'm like, all right, well I'll go live and I'll call the trade live and I'll show you the profits live and you know the results live. So you can see that everything from like step one to analyzing the asset, step two, entering the trade, step three, you know, winning the trade, and step four, showing you the profit. So I don't know how more transparent I can get with like K2, but it's funny because
well, some people are just haters and they have to look for a reason to complain. I have realized that, you know, some people, it doesn't
you know
matter
what I
what
say.
system
You
or what
definitely say.
rules you give them, they have to find something that's wrong with it. Like I was watching a YouTuber, his name is Just in Time FX, and he was saying something similar to what you're saying now with like you can give someone the best strategy in the world, best indicators, the rules to follow. If they don't have the discipline or the mental strength or the psychology to actually follow it, then they'll lose every time, you know? Because
Mhm.
like there's a lot of strategies that work. If it has a 51% win, if it has a 50.1% win rate and you take every trade, then as long as you take every trade, you'll be up at the end of the month. But people just don't like to follow it because they want to look for excuses and stuff. You know, that's why I like when you said trading really isn't for everybody. And I was struggling with that the other day thinking of that. I was like, is trading not for me? Like, am I just too greedy as a person that, you know, maybe I need to just pay someone to trade my account for me? But no, I think I'm gonna stick with it, you know. This call has definitely helped me. My last question, you know what futures are, right?
Yeah.
So with futures, indexes are basically futures. They're literally the same assets. And I have traded futures before, and like I have certain systems with them. And the person I watch, he's been trading them for like years now, and he uses like trend lines and Fibonacci's, and it obeys Fibonacci's and trend lines like to the exact tick with futures. But
Hmm.
using them here, it's like it doesn't work for some reason. It ranges and whatnot. And I was trying to figure out like why that is. Like he predicted like the March drop. He predicted it using Fibonacci's and trend lines and stuff. And the coronavirus helped, of course, but he was like, this is where it's supposed to go, you know, like it just hit a major Fibonacci and this and that. And it dropped. And then using it here, it like does not work at all. And I was just curious if you knew if it was because like they're just measured differently. Because with futures, it's like it's micro contracts, it's micro e-mini contracts and e-mini contracts, full contracts. And you know, it's like 500 intraday trading, and then it goes by like it moves in ticks of 0.25 to equal, you know, 12.50, $1.25 a tick, and 25 cents a tick and 50 cents a tick, or $5 a tick. So I didn't know if that was the reason, because since they're the same asset, basically, I would assume that they're supposed to move the same way.
Yeah. Well, yeah, they should move the same way. I mean, the only difference would be with pricing, because the thing with like indices, they're like the prices are created by the broker, so like it's all broker based. Because what they
That
do.
would make a lot of sense then, since Fibonacci's are based off of prices.
Exactly, yeah. So like the pricing is different. So if the pricing isn't the same, you know, from the raw price. That's why like with FTMO, people get super confused because a lot of people aren't familiar with futures. They use like the raw data. That's why their pricing is so much, it's so off from like the indices that we follow, because the indices that we follow are broker, you know, the brokers have created those pricings. So that's why it's a little different. You know, it's off by like 100, 200 points
Right.
because the broker decides to, because that's how they make the money, right?
Of course, yeah.
They're a market maker. So basically, what they'll do is they'll sell you contracts and then they'll rebuy them at like a discount through the raw broker.
Yeah,
Basically.
when you lose the trade.
Mhm. Exactly. Yeah. Exactly. So that's how it would work for that. So that'd probably be the main reason behind it in my perspective. You know, obviously there's probably other factors that are factored in, because I don't even know how brokers determine these pricing for
Okay.
you know, for the indices. But yeah, for the most part, I think the main difference would probably just be pricing. I think that would be the different inconsistency along along the lines of like why it moves differently or why the tools work differently. Because I'm sure you've seen, like, even with US 30, you know, some people used to use Owanda, and I use currency.com. Currency.com was like an actual futures broker, and they use the futures pricing. So that's why I found the indicators to work a lot better on currency.com, since it was using the real future price versus Owanda, where it was using, you know, their own broker made pricing. And then the indicators would kind of come up differently. Like for some, you have a signal for currency.com, and then for another one you'd have a signal for Owanda, and you're like, okay, which one do I take?
Yeah. That's why you were saying that you use the like forex.com and currency forex.com and
Currency.
currency.com broker. Because like when I first started talking to you, I told you like I was going to use these indicators and whatnot to like mess around with trading futures, because I love trading futures because, like as I said, it literally obeys Fibonacci's and trend lines and things like that. But since it's priced differently, you can't use the same, like, 150 pips, because 150 pips or 150 ticks on the future side would be like,
It's like, yeah.
$15,000-$20,000, and I'm not risking that much money on the future side. So that's why I was like, oh, I can just trade with like the indices side, since it's the same thing, and the whole pricing. Maybe I could like back test if they move the same, but just the pricing's off. Because if they move the same, then I could always just chart it on the future side, but enter on the indices side.
Yeah,
Because
exactly. You probably could, because, you know, in reality, I mean, there's always ways around it. You could find a solution. You just
yeah,
have to back test it and see what works. Because usually it's just there's usually like little things that you can change to like make it better. Maybe, you know, apply the indicator differently, or use it in conjunction with something else, and then you can make something work. Like literally, you just gotta like use your imagination. You know, basically when
yeah,
like
you just got to put in the work and actually back. That's another thing I've realized is, like, a lot of successful traders, um, they put in a lot of time back testing or what. For the longest time, I hated back testing, man. I was like, why do I have to waste time back testing these strategies and this and that and trading? And I realized, like, no, back testing helps out a lot, because it gives you the confidence to be like, okay, this strategy works, or if you can see results. Because, like, I can guarantee, like, if you were just posting these trades and you didn't have like back tested results, people probably wouldn't be so eager to enter, because they wouldn't have that confidence. But you can have confidence because you're like, hey, every month at the end of the month, this is positive. As long as you take every trade, this is the type of profits you can be making. Because I hated back testing so much, because I feel like it just takes so much. I don't know how you did like a couple years back testing with US. I was just back testing earlier. I did like 45 minutes. I was like, yep, I think I'm done for the day. Cause oh man.
Yeah, you know, well, the thing with back testing is like, once, like, I used to hate back testing too, but once I started to figure out like strategies that actually worked, it got me super excited, because I was like, damn, I'm hitting profits after profits after profits. I can't wait till I get this back test done so I can start applying it for real, right? And then I started applying it for real, and I'm like, damn, it's playing out exactly how it did when I back tested it. And then it just gets me more and more hot, more and more pumped, where it's like, I might as well keep back testing other stuff or other assets, and then just keep, you know, reapplying it. And that's pretty much how I figured it out from that point.
I got
Um,
you.
yeah. I mean, it's all with repetition, you know, because obviously if you're back testing and it doesn't always hit, you're not going to be as excited. But if it just keeps hitting, you're like, oh, damn, this actually works. And you just want to keep doing it, doing it
Yeah.
on that point. Because the thing is, even before, when I back tested the strategy originally, I always show people the backtest results, and people still didn't believe it. People didn't start really believing in K2 until like middle of last year, because then I started to record all of the actual signals, right? It wasn't just backtest, it was like forward testing, because it's like, we took this trade, we had the signal here, and I have all the details there. So it's like, if you want to go and backtest, you know, all of our trades, you guys can see that it actually worked and stuff like that.
Yeah. Yeah, and I think that's the another important issue. It's really what gives people the confidence to be taking a trade. Back testing to see that there's either you back test yourself to see that it works, or you can see back tested results. Because I was talking to some people the other day, and they were trying to do like find people just to take signals from. And I'm like, a majority of these chat, like that's the message I had sent you about, like, hey guys, I know a chat room that has back tested results and things like that. So I'm like, a majority of these chat rooms, like, they don't have back tested results and stuff. And really, to make crazy profits, you need to have confidence in your trade. And the only way you can have confidence in the trade is if you've done backtests to be like, hey, I know this wins 7 out of 10 times, 8 out of 10 times. So even if this is a loser, oh well, perfect. I know even if the next two trades are losers, perfect. The next eight are gonna be winners. And that's really the only way, is that you got to have confidence in the trade. to make crazy profits. Because I was doing the same thing before with bouncing around chat room to chat room, looking for signals, looking for the easy way of, oh, if I can just copy all these signals and this and that, then I can make crazy profits. And as long as you don't have confidence, then you'll just never make crazy profits, and you'll always be relying on somebody. Like this works perfectly because you have the back tested results. Like it's like you can have the confidence that you back tested it yourself since you've actually back tested and you show every single trade. It's not, oh, I back tested this for a month, it worked. I back tested this system for a week and it worked.
Exactly. And you have to understand that, like, the market's not always going to be the same. Like you might just get lucky and back tested a really good week. And then the week after you're like, damn, I lost every single trade because there's there's no real data behind it to really give you a good sample to really understand it. But yeah, I mean, that's pretty much how it worked for me. Like I know the back test and I know the results. So like whenever we do take a loss, I'm like, all right, it's cool. It's just a bad day because I know that I'm probably going to bounce back on the next trade or the trade following that just from the back tested results.
Exactly as you had said with that other dude about the whole, like you were saying, yeah, we just ran into a couple US 30 losses, but like from the back test, we're going to swing back sooner or later. And, literally a week later, 2 weeks later, 4 back-to-back wins. So I hope he did recover his account. My last thing is funny because like I was stressing out so much in the beginning with like the different prices on how you did on MT4 and TradingView. I'm like, how does he do this and calculate it? And I realized like as soon as a signal comes through on TradingView, you just enter at market exactly as you do on your MT4, and then you just add. So it's 150 on MT4 or it's 150 on TradingView. It's not, oh, this is the number on TradingView. And I thought you were like, this is the number on TradingView, and then I'm subtracting this number from it, and then I got the number on MT4, and then I'm like, how the hell? And I realized that when I was looking one day, and you had entered it, the signal came through, and I was watching it, and then it closed, and you entered, and then I entered immediately as well. And then I looked, I'm like, so that's what he was doing. Wow, I was making that way too complicated than it actually was.
Yeah, exactly. I enter market and then I just enter the number into TradingView and I just change the parameters from there. So it's because the real difficult part is finding the entry point for FTMO because the price is moving so fast. It's not really easy to do the calculation. So I just enter at market and then from there I can go ahead and make my adjustments, on the screen following it.
Yeah, the 150 up or 150 down. Yeah, I realized that's what you were doing when I just entered that market on my MT4 when the signal came through and we literally had the exact same entry, or I was like a couple pips off. I'm like, that's what he was doing. Man, I made that so complicated. I thought you were doing some type of math on TradingView when you were like, okay, the price is 31,015 and now you got to subtract 100 and something. And then you go to your MT4 and this is the price and you put in your order. And I'm like, what is he talking about? But I see what it is now. It's just literally just intermarket whenever the signal closes. I'm like, that's so easy. Like, wow.
Exactly. Yeah. And then, I mean, in the case, if you're like not entering at market, you can always just like even if you were to enter something like this right here, where it's like 74 or whatever, you can just you just subtract it by 200. I always what I do is I overestimate so that I don't, get in too tight. So I would just do this and then just subtract that by 200. It's 683. I just go to 483. All right, cool. There's my entry right there. Because for FTMO, I noticed that price is always lower where than price currently is because it's a bit delayed. I mean, obviously the brokers have that delayed price because they want to add that little cushion in between so that they can, if you end up losing your trade, they can pull out 200 pips before you get stopped out because they already know where the price is going after, right? Because they have the actual raw price. So their price basically just trails the FTMO price, basically.
Yeah, got you. Last thing, how's that? Are you still in contact with the FTMO CEO? I know you said they reached out to you. You guys were looking to work out some type of deal or something.
Yeah, I mean, we tried. I need to follow up with him actually. I emailed him, but it was during the holidays, so I think it probably got lost in his email. Because he emailed me and then I emailed him back, but it was literally I think on Thanksgiving Day or something like that. So, or no, it was around Christmas, I think. So I probably have to just follow up with him because I'm sure he gets a ton of emails too. I'm surprised that he actually he actually reached out to me, the actual CEO, because you'd expect someone that's because I had no connection with him before that. You'd expect someone like that to just have someone else like an assistant talk to me or something like that.
Yeah.
But for him, I actually sent him the K2 strategy too. I was like, bro, look, people in K2 are passing your FTMO, it's a win-win for both of us. Let me just, advertise K2 within FTMO because obviously it works and everyone's passing FTMO. So that's the kind of deal that I was trying to run with him. I was like, oh, maybe I'll do an interview with you, something to just get K2 out there. Because in reality, if I could teach a ton of people the K2 strategy and everyone uses it on FTMO and everyone wins, the CEO of FTMO is going to make money too. I was like, well, if you
Yeah,
don't,
oh yeah, it'll make a lot of money. They definitely get a cut. I did want to speak to you about that actually, because I know you said you were looking into it before, and then maybe you changed your mind, and maybe you can mention this to people in the like the London chat for the when they were doing the account management thing. They may want to be careful about that because I spoke to the FTMO people about that, and they were saying if they get the like a realization or they see that like something's fishy going on with a lot of accounts taking perfectly the exact same trade, then they can hold to like cancel your account. Because I was thinking like doing me and my brother, like type of account copier type thing, and they gave me a very stern warning about doing that, with saying they could easily cancel my account. And I was like, oh, so if I did it with using K2, maybe I'll use Forex strategy for one and US30 for the other, because they made it very clear about you can get your account canceled by that. And I was like, yeah, I don't want to lose my account.
yeah, in reality, I think it's more sort of a precaution thing because they don't want people to do that. And then everyone, I mean, there's always going to be issues with copiers, right? Like it's
Yeah,
not.
of course.
So I think the main issue with them is like I don't think they care if you're using copier because if you're making profit for them, it's cool. It just takes like one person to fuck it up for everyone. Like one person's copier messes
Yeah,
up.
one person screws up and then they copy on 5 accounts. Now 5 accounts screwed up and they're out of profits and things like
Yeah,
that.
yeah, exactly. Like their FTMO accounts, say like they're running like 5 or 10 like funded accounts, and it's all nice and dandy when everyone's making profits. But as soon as one time they mess up and it loses like 5,000 per account because that's like the max limit, then they're gonna raise some red flags and be like, oh wait, this guy like did something fishy here, and we don't want him to do these risky trades anymore, right? Because in reality, if you're running a prop company like that, you want risk management. Risk management is always number one. Your main goal is to be in positive every month. That's like number one goal.
Yeah,
Uh,
that's all they care about.
that's all they care about. They care about the bottom line. If they're in positive at the end of the month, they're not going to give you shit. But if you're going to go blow like 5 accounts at once, you're going to be like, all right, this guy was doing something fishy. We're going to ban him from the thing. And I don't blame him from that because myself, if I was giving you 100K to trade and I saw that you were doing these super risky trades, you're just getting lucky every so often, and then one day you lose all the money. It's like, all right, well, I'm not going to trust him again because even though it was all fun when he was making money, what are the odds of him doing that again and making that same mistake? So it's totally logical. And even with the requirements, a lot of people get upset about their daily requirements and about their max requirements. And I'm like, just put yourself in their position. If you gave someone 100K, you're not going to let them blow your account on like one trade just because you think it's going to hit. And people just never get it. It's funny.
Yeah, exactly. And when I was doing it, that's what I was saying. When I lost those FTMO accounts, I came to the realization that like I didn't know perfectly and exactly everything I was doing. Because I mean, 10% is a lot to lose. Like
It really is. Yeah.
I forgot the rule, but it's like if you lose 10%, you got to make like 11 or 12% to make the money back. And it's like no nonsense Forex. You said like realistically, if you lose 10%, you're probably not going to make it back. Because if you lost it in the first place, you're probably not a good trader to make it back.
Exactly.
So that helped me realize like I didn't know exactly what I was doing. I'll make sure I'll send you that white labeling stuff for that other prop firm company. They don't have indices on it, but they have gold and Forex. But there's like certain things you can do with like instead of like having people pay for multiple accounts, you can do like if they have a 10% increase at the end of the month, then you can like basically double their account every month. They can go all the way up to like 1 million, and you can use like copier services to do like they can get like you'd be able to get like that's revenue from them doing the copier service things. And as soon as I saw it, I'm like, wow, this would work amazing for you if you had like either your account or you had set it up and then people paid you to do the prop firm thing. And then as long as they're taking these trades and they're making, because all they would have to do is the Forex trades and you can hold it over the weekend and they make X amount and you can double their account type thing. And I was like, man, that would work beautifully. So I'll make sure I DM that to you. But I won't take any more of your time. I think I need to do some back testing and watch some more Mark Douglas. Thanks for talking to me. It's giving me some confidence to keep going with my trades and follow the system since it worked. I just got a little bit ahead of myself and greedy. So just gotta give myself a break, it seems.
Yeah,
Stressing myself out,
definitely.
my hair's falling out.
Yeah, no, no. I've had like a year like that, bro, where I was just stressed out because I wasn't sure if it was working or not. But the cool thing about K2 is like you have a whole community of people that are doing the same thing. So if like you're not doing right, you could probably check with someone, if they're doing right. But for me, like before I was doing all this stuff on my own, so it was like really hard because I had no one to check in with. But now I think like now that we have K2, we have this community where everyone's applying the same strategies, looking at the same things. It definitely helps us, grow as a team, not just individually. So
Yeah,
yeah,
it's
definitely. If you
beautiful.
ever run into problems, I'm pretty sure you could just pop that question in the chat. Someone else could respond to it if it's not me.
All right, perfect. All righty, man. Have a good day. I'll be in on the next session that you have and gain
Definitely.
some knowledge.
Yeah, so I'll probably see you tomorrow morning.